So there's always something to worry about, and the key organ in your body in the stock market is your stomach. It's not the brain. If you can add 8 and 8 and get reasonably close to 16, that's the only level of math you need to know. You don't know to need the area under the curve. Remember that quadratic equation and an integral calculus and the area under the curve? I mean, whoever cared what was under the damn curve? I mean, but you had to study this. You don't need this in the stock market. So all you have to know is you're going to see, it's always going to be scary. There's going to be always something to worry about. And you just have to forget all about it. Cut it all out and own good companies or own turnarounds. Study them and you'll do well. And that's all there is in history is the market goes down. The math is simple. There's been 93 years a century. The market's had 50 declines of 10% or more. About once every 2 years, the market falls 10%. We call that a correction. That means, that's a euphemism for losing a lot of money rapidly. But we call it a correction. And 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. So every 6 years, the market's going to have a 25% decline. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. So you can take advantage of the volatility in the market if you understand what I'm trying to convince people. There is a method. There are reasons for stocks that go up. The very magic number, easy to remember, Coca-Cola is earning 30 times per share what they did 32 years ago. The stock has gone up 30-fold. Bethlehem Steel is earning less than they did 30 years ago. The stock is half its price of 30 years ago. There's a company behind every stock. If a company does well, the stock does well. It's not that complicated. You would have seen Chrysler come up in the minivan. You would have seen the Chrysler dealership packed with people. You could have made 10 times your money on Chrysler a year after the minivan came out. When your lifetime's over, you don't need a lot of 5-baggers to make a lot of money starting with $10,000 or $5,000. So in your own industry, you're going to see a lot of stocks, and that's what bothers me. There are good stocks out there looking for you, and people just aren't listening, and they're just not watching it. And they have incredible edges. People have big edges over me. They work in the aluminum industry. I see aluminum industries coming down, inventories coming down 6 straight months. They see demand improving. So when you see this coming, you can say, wait a second, I can make some money. When an industry goes from terrible to mediocre, the stock goes north. When it goes from mediocre to good, the stock goes north. And it goes from good to terrific, the stock goes north. There's lots of ways to make money in your own industry. You can be a supplier in the industry, you can be a customer.
Be fearful when others are greedy, and greedy when others are fearful. So really, you need to be a true contrarian investor to be successful in the market. You need to observe the masses, do the opposite, and also be right. So when everybody else is fearful, when everybody else is actually scared of actually investing into the market.
Okay, just calm down.
I am calm.
Like what happened early in 2020 when the global health pandemic hit the world. People were actually afraid, there was a lot of fear, there was a lot of noise, and that was actually the best time to invest. So that's what I personally did. I loaded up the truck on stock investments during that time and made some major gains in the market, and that is the best way to invest. And also, if we go back to the tech bubble during the late 90s, stock prices were at all-time highs. Everybody was greedy, and that was the best time to sell. So remember, guys, observe the masses, do the opposite, and be right. That's a key to successful investing.